What's going on Facebook? This is David W. Williams, also known as Diamond Dave. So we're doing Market Mondays for 6/15/2020, and wanted to really quickly give you some kind of context to why we do this. So one of the reasons why we do Market Mondays is because we understand that a lot of our people, right, we're talking about poor and working class black people, don't get to see people that look like us talking about the markets, right? And they don't get to see people speaking about it in a common tongue and in a way in which it relates to them. So we created this particular video series, and we're going to start live streaming on Facebook and on YouTube, still getting my integration down. But we're going to do this weekly because what we want to do is start getting you to understand that having a conversation about what's going on in the markets is really just as normal as having a conversation about sports or something that may be going on in pop media or pop culture or something that may be going on in your local area. It's not something that's reserved for a lot of older white guys in suits. Right? And so we're going to go ahead and get into it. If you know somebody that can get value from this, please share it out. If you got any questions or comments, hit me up in the comments. I may be able to answer them while I'm still live. If not, I may get to them later. So today is 6/15/2020. It's Monday. The market closed. So we're going into the aftermarket. And so what we want to talk about is that there was a downtone in the market later last week. Thursday, Friday, the market went down after a few weeks of going up. A lot of people were anticipating that we were going to totally push out of coronavirus, and then we started getting reports from other parts of the country, but also inside the United States, that we may not be 100% over coronavirus. So what we saw earlier last week is the market, there was a sell-off. The market went down somewhat. What we saw today is that the market rebounded somewhat, not 100%, but it did rebound. But we saw last Monday when we had this conversation, the market was positive for the first time in a very long time. Towards the end of the week, it went back down. So we're kind of starting that same rebound effect that we had at the beginning of the week that we saw last week. So we noticed that the Dow Jones average closed around 0.6% higher, closed around 157.62. The S&P went up around 25 points to finish at 3,066. What's going on, Teeth? And NASDAQ advanced around 137.21 to 9,726. Teeth, if you know anybody that could get value from this, I would appreciate it if you shared it out. So one of the reasons why we believe that the market rebounded, because we started the morning off red and then we over time went green, is that there was a press release that came out that the Fed was going to start buying eligible corporate bonds to create a floor for assets. So if you're not really savvy in the markets, you may kind of not know what that really means and what is the psychological effect of them saying that. So what the Federal Reserve is saying is that what we're going to do is we're going to create a floor. And when I say a floor, I mean that the market won't go under a certain number for eligible corporate bonds. So if you're now trying to issue corporate bonds, you know that a market has been set for a floor, right, for what you can sell those corporate bonds at. So one of the things that's going to do is going to create a lot of confidence in the marketplace, because one thing we understand is about humans, we start talking about human psychology, is humans don't like uncertainty. And they also don't like ambiguity, right? And their brain struggles to deal with uncertainty and ambiguity. So what the Federal Reserve has decided to do because of coronavirus, because what coronavirus has done is it created a lot of uncertainty in the market. So what the Federal Reserve has decided to do is that one of the ways in which they're going to try to get around that uncertainty is that they're going to essentially create a lot of liquidity in the markets. Okay. So that's one of the reasons why they're doing what they're doing. So we got to understand is that the Fed is now coming in saying that they're going to create a floor for corporate bonds is another way in which they're trying to get rid of uncertainty. They're trying to get rid of ambiguity by creating a floor for corporate bonds to allow the market to go back up. So what a lot of people believe is that once that news came out this afternoon, that's why we started to see the market rebound. So I want you to think about that as an investor. What are situations in which you are noticing that people maybe are uncertain? They may be dealing with ambiguity where they kind of don't know what direction the situation may be going in, or they're very unclear and how they respond to that. And that can kind of give you an idea of where you believe the market is going to go. So now let's roll into some market news. So I wanted to talk about this because this is very, very important. There's a guy named Leon Cooperman, right? And so you can go Google who Leon Cooperman is, even though we're going to talk about it in this particular video. He just did an interview on CNBC, I believe, where he talked about he was critical of what we call Robinhood investors. What's going on, Victor? So he classified Robinhood investors as people that are kind of uneducated. They really don't know what they're doing. And because they have access to the Robinhood app or other mobile apps, and they're commission free now, what a lot of happen is that a lot of people are going into the market and they're buying securities that they really don't understand. Now, he's right on that particular point that there may be a market of people, right? There may be an audience of people that are buying things that they don't have 100% complete, comprehensive understanding about. However, that's the good thing and the bad thing. The good thing is that they're in the markets, right? That's the good thing. The good thing is that they're in the markets, right? Because they've gotten over their disbelief that they can't be involved in this particular space. The bad thing may not be that they maybe don't have a comprehensive education to understand what they're doing, but see, they can always be educated. But see, what I want you to do is I want to shed some light on who this guy Leon Cooperman is, right? Because I want you to understand the opportunity that exists for him that he has decided not to pursue, because a lot of times these people, what's going on, P. Ray Easley, they've decided to essentially take an oath to the status quo. So Cooperman is a billionaire and he's a hedge fund manager, right? So he's chairman and CEO of Omega Advisors, which is a hedge fund. He has $3.3 billion in management. You can go Google that. Then he also manages another fund called the Omega Charitable Partnership, in which they got around $974 million managed, which is almost $1 billion in that particular partnership. So he's over two funds. What's going on? So now I want you to understand his background. Cooperman pledged Alpha Epsilon Phi, which is primarily a Jewish fraternity. Now, we're not saying this to be denigrated of Jews or to be critical of him because he's Jewish, but it is a fact that it is primarily a Jewish fraternity, just like Omega Psi Phi is primarily African-American fraternity. Now, AEP, I'm using the abbreviation or acronym, it is a fraternity with 7 billionaires in it, right? So 7 billionaires have been produced out of that fraternity. Currently, outside of Cooperman, who's one of the 7, so he's one. You got Zuckerberg, the chairman and founder of Facebook. You got Sheldon Adelson, who's the, I believe, the CEO and the chairman of Las Vegas Sands. So now we understand that Sheldon Adelson is probably around 80-something years old. So this fraternity is very old, and they've pushed a lot of people through it. And if you look at the who's who in that particular fraternity, it's a lot of people that are very high level in our particular society, but not just nationally, but also internationally in places like Israel. Now, Cooperman worked at Goldman Sachs. He had a really good career there, and then he eventually became CEO of Goldman Sachs Asset Management, right? So now he runs a not-for-profit, a 501c3 called Portfolio with a Purpose, where you invest a certain amount of money, and based on your success, that particular money gets sent to charity, if I understand the model that they've built. But when you look at somebody like Cooperman, that's a billionaire, right? He has a really extensive network of other people that are also billionaires. An opportunity exists for him to really educate people on the markets, right? There's a massive opportunity there for him to do that if that was something that he endeavored to do. But what we understand in this particular society that we live in is that for many of us, based on, who we were born to, based on our social status, our class status, many of the people at higher levels of society have already decided our position in this particular society. So to them, it doesn't make sense to educate a certain group of people on the markets, because then therefore they're not going to be suitable for the particular position that we want them to play. So when I'm looking at a guy like Cooperman and he's being critical of what he calls Robinhood investors, we have to understand that for a man of his wealth, his network, his position, there's a massive opportunity for him to change that in a very proactive and positive way. But he has been committed, or he is committed to the status quo, which means that the majority of Americans don't understand anything about investing. What's going on, LaDre? Then just how to put some money in a 401k and hope that it goes well. So let's now roll into jump outs. So what we're going to talk about in jump outs is particular companies that may have jumped out today that you may want to further investigate, not necessarily to invest, but maybe to try to get a better understanding of what's going on with that company. I want you to understand that I'm not a financial advisor. I don't have a license. I'm not here to give you financial advice. This particular video is primarily for entertainment and also for educational purposes. So today, Zoom rose up around 8% on Monday to an all-time high. Zoom was up around 251% for the year. So with Zoom, ever since this coronavirus came out, we've seen Zoom continue to go up to new highs, right? Every few weeks, they're hitting a new high. They're not coming down, and they're really not hitting a lot of resistance. And the market is very bullish on Zoom because they believe that because of how the workplace situation has changed as a result of coronavirus or COVID-19, Zoom is now become an essential piece of software. I was on Zoom maybe 4 or 5 years ago when they first came out. I never really was impressed with it, but so much time has passed between then and now. They've probably done a lot of iterations of the programming of the platform where they probably have a better build, or what I'm saying, and it may be probably a lot more robust than it was when I was currently on there. But when I was on there, I really wasn't impressed. But Zoom has been able to take a lot of market share very rapidly because people see them as very much as a need-based particular service right now. I personally would look, if Zoom continues, what's going on, Chastity? If Zoom continues to have this level of success, I would look for Zoom to get acquired. And I'm surprised we haven't heard rumblings yet about an acquisition of Zoom, because if I was a company, I would be looking to get into Zoom now before their market cap gets too high and you're going to have to pay a really, really steep price just to get in the door, right? But if Zoom continues to move the way it's moving, I would look for Zoom to get acquired, because what Zoom is doing right now is they're building a really, really big customer base. And it's that customer base and that customer list is where the real money is in that particular business, right? It's not people paying up front, even though the subscription business is a big business. It's really that customer list and that customer base. That's the real business for Zoom. So if you could buy that and to get access to that list, because essentially what you have is a buyer's list, that's where you can really extract a lot of value out of that particular company. Now let's talk about Walmart and Shopify. So some news came out this morning, but I heard it really came out last week, that Walmart and Shopify have a partnership to make Walmart Marketplace available to 1 million Shopify sellers, right? So everybody that has a Shopify account, now they're going to have access to Walmart Marketplace. So Shopify went up around 8.4% on that particular news. A lot of people are bullish about Shopify because what you understand now is that Shopify sellers now have access to Walmart Marketplace, which essentially gives them a new platform to sell on. I think this is a really good partnership because it allows Walmart now to integrate themselves with a really fast-moving e-commerce store. You also may want to look again is that Walmart may eventually look to acquire Shopify sometime, because one thing about Shopify is they really understand e-commerce, especially small business e-commerce, and we understand Walmart is running big business e-commerce, so it allows Walmart to get access to a totally different market, right? And kind of understand how to play the game on that level where they really don't have a lot of experience at. And if you look at Shopify, a lot of really, really well run Shopify platforms, the experience is a lot better than what you get on Walmart.com, which is amazing that $1 billion company can't hire developers to really give you an intuitive e-commerce experience. But that's how it goes when you have companies that big. A lot of times their network is people that really don't understand what's on the cutting edge of digital marketing. So a lot of times they're going to be late to a lot of things because Shopify being a smaller company and also being a younger company, they're moving a lot faster and their ideas are going to be a lot more innovative than somebody like Walmart. The next one we want to talk about is Viacom, right? So Viacom went up around 8% and was the S&P's 500 biggest gainer on Monday. So the biggest gainer for the day was Viacom. And one of the reasons why Viacom jumped up is because that the CEO came out and said that live sports for Viacom is going to be back in June. They're going to start with PGA golf. So what we're seeing is that a lot of people are trying to push forward out of the sheltering in and the quarantining of coronavirus. Live sports is going to come back. And I really think that the economy and a lot of the people in this country are going to settle down once live sports comes back, because one of a big part of the American entertainment experience is live sports. And I think one of the reasons why we had so much civil unrest is because there are no live sports to distract people from everything else that's going on in the world. So you have an audience of people that were captive. They don't have a lot of places to focus their energy, but they're conditioned to be distracted. So what they did was they kind of latched on to whatever was going on at the particular time, which was a civil unrest. So I think as we start to roll out more and more live sports, you're going to see a lot of bullishness in platforms that hold live sports. I know Chastity, I know you're real big on DraftKings. You're going to see platforms like that start to become a lot more attractive for investors, because we know they're going to be able to command a lot of those eyeballs, because one of the biggest challenges that we have a lot of people that desire to watch some type of live sports, but because of the coronavirus and the quarantining and the sheltering in, they weren't able to fill that particular desire or demand. So wanted to wrap this up. We don't keep it real long. I'm not here to really do a lecture on the particular markets, but what we want to do is have a real quick conversation on what was going on in the markets today. I want you to look forward to trying to determine whether or not you think the markets are going to stay green this week, or we're going to see a repeat of what we had last week, where they start off green, and as we get deeper into the week, they close red. And based on which direction you think they're going to go, what's going on, Levon, you kind of want to decide where you're going to make your plays, whether you're doing buy and hold, you're doing swing, you're doing day trading, or you're doing options trading. If you know somebody that can get value from this, share it out. If you have any questions, put it in the comments. This is David W. Williams, known as Diamond Dave, the founder of the highest paid part-time job in the world, and I'll talk to you later.